Good afternoon, ladies and gentlemen. Welcome to the final round of market today on this fine Monday afternoon. This is the first day of the week, the first day of the April F&O expiry, the first day of the month, as also a new financial year right there in front of you. The Nifty, as we all know, opened gap up about 100 points and at the moment is about 22,454, 126 points higher. Ditto for the Nifty Bank, 47,500 for you, about 380 points higher. Both indices opened with a gap up, and from then on they've completely flattened out. There's nothing much happening there. But the broader markets are in absolutely fine shape. If you look at the National Stock Exchange, you have about 1900 shares in the green compared with 228 which are in the red. So the advanced decline ratio 9:1. We track about 19 indices for you. Out of 19, 18 are in the green. The rally today is led by the Nifty Realty Index, 4.5% higher at 937. It's the FMCG index that's in the red, but apart from that, the small cap index is up 2.8%. The mid cap index is about 1.5%. And if you look at the NSE 500, the broadest measure that we track, it's up 1%. Amongst the new highs in the market, it's the PSU theme that is dominating. We'll show you Cochin shipyards. It's moving very, very rapidly to a fresh record high as far as prices are concerned. It went up to all the way 970, and from then on a bit of profit booking is happening. As far as the Nifty is concerned, the gains are led by today the metal pack, JSW Steel 5% higher, 872. Tata Steel a fresh record high, 4.5% higher, 163. You have a strong move coming in on Shriram Finance, 2428, 2.9% higher. As far as the advanced decline on the Nifty is concerned, it's dramatically in favor of the bulls. Amongst the losers are Eicher Motors, 1.8% lower, 3946. If you look at the all-time highs here, it's Tata Motors, Adani Ports, L&T and Grasim, which are at record levels as far as prices for today is concerned. We are joined by Abhishek Basumalik, founder and CEO at Intelligence Capital. A very warm good afternoon to you, Abhishek. How do you see the sentiment on today? We've had a fairly strong opening, but the bulls are unable to crack past 22,500. What is your sense of the market?
So first of all, thanks, and wishing all of you and all your viewers a wonderful new financial year. Hope we all continue to make money like we did last year. Coming to the markets, I think markets have been range bound if I look at it from a broader term perspective. And I don't think that we are still, out of the ranges yet. But I think overall we are getting into a pre-election rally kind of mode, if I would have to really categorize it. And I would not be surprised if we see a rally going into the next month.
Fair point. That's the view coming in on the Nifty, and there are all signs which point to this direction. If you look at how the Nifty has shaped up so far, the last day of March, which was the previous Thursday, was also the end of the expiry for that particular month, and the index actually rallied very, very sharply on that particular day, helping bulls. Now a very strong support on technical charts as well as options plays has come in at 22,300, and that's dominated by bulls at that level. Beyond that, a resistance has been seen forming at about 22,500. Let's see what it takes to break that, but as Abhishek says, he sees higher levels coming in. At this point of time, Abhishek, what are you advising your clients? Are there some stocks that catch your fancy on the long side?
See, I think it's very important to understand that markets will go up and down. We saw pretty vicious profit taking last month, beginning of last month. Now we are seeing the other side where the broader markets have jumped up today. This thing is going to continue, in my opinion. We're going to see these kinds of diverse, very sharp up moves and down moves till we see the Indian elections, the US elections, all of these things play out. And liquidity has been extremely strong coming into India, both from domestic as well as expectations from FII flows. So overall, I think it's very important for people to understand that even though, we are close to all-time highs in the markets, this is not the time to be away from the markets. It's the time where you need to continue to, build your portfolios, continue to do your SIPs. That's what, broadly I'm advising my clients, because the biggest concern I hear today from investors is that markets have run up so much, we are at all-time highs, should we invest now? And the point is, if I look at, say, a Nifty at 22,000, at some point it will be at 30,000. So from the journey from 22 to 30 will mean that there will be many all-time highs which will come and go. So you can't sort of stop yourself from investing because Nifty is at a certain number which may be close to the previous highs that it has made. So broadly, I think the message that I want to leave with all investors is the Indian economy is doing well. We are one of the bright spots in the global world. And we need to be invested in our own markets for the next at least a decade, I think.
Yes, you have a point there. But sadly for Abhishek, for products like ours on YouTube and for people like me, we live by the hour, if not by the minute. And therefore, on a daily basis, we need some material to be presented to our viewers. Be that as it may, that's not an issue. Yes, in the longer term, we look pretty good as far as prices are concerned. And yes, we need to be invested for a minimum period of 10 years. That's how sensible people like Abhishek advise their clients. Meanwhile, what I'll do is, Abhishek, I'll just take a detour into the markets. The activity
so
is really
add
picking
one
up
more
as far as
point,
prices are concerned.
to what you
I'll
were
just
saying.
mark. Please do.
Sure. So, I'm not suggesting that we remain invested in one stock or a set of stocks for the 10 years. I understand that individuals will have different time horizons which are ideal for them. There are people who are happy day trading, swing trading, position trading, etc., etc. My point was that if you miss the bigger picture, that India as a country, as an economy, as a market is headed higher, right? That is what the basic point I want to make is that we are headed higher. You suit your time frame. If you are a day trader, be happy with it, but be invested. Don't shy away from investing because we are close to all-time highs.
Yes, absolutely. This probably is one of those golden periods that Indian equities are sort of undergoing, and people with a longer term horizon will definitely make more money than short term traders. I'll just seek your indulgence and mark a couple of stocks that are moving fairly rapidly. Adani Power, we'll just show you, is at circuit, up 5% at 560. A lot of hectic activity coming into stocks such as PNB Housing Finance. Remember, Morgan Stanley came out with a report in the morning, and that's just pushed the counter 14% higher at 721. Record volumes happening here. About 69 lakh shares have been traded on PNB Housing Finance. That's 17 times the 5-day average. You're seeing very strong gains coming in on Tejas Network. This is a double-digit gain. 10.9% higher. Tejas Networks at about 728, accompanied by a sharp burst in volume. 11 lakh shares have been traded, 4 times the 5-day average. Similarly, the two other shipbuilding companies from the Government of India, Garden Reach Shipbuilders, 5.7% higher, 808 rupees. We've discussed Cochin Shipyard, 9.7% higher, 956, and Mazgaon Docks. This is 7.5% higher, now at 2,000. So a fresh momentum has been seen as far as the PSU basket is concerned, especially defense stocks. This also includes BEL, 209.55 at the moment, doing fairly strong as far as prices are concerned. Coming to you, Abhishek, would you hold a view on any of the defense stocks? What catches your fancy?
See, I usually do not talk about individual stocks, but definitely will talk about the sectors. So defense, if you see, I think for the first time in independent Indian history, 21,000 crore export of defense orders is what we did, right? So that is a big landmark. And if you look at the geopolitics, how things are shaping up. This number is one going to go up, and we will also continue to have more domestic consumption of defense. If you look at the number of naval vessels that we are deploying today, uh, that is going up. So overall, I think this is a time when defense spending across the world is going to go up for the next few years. So most of the defense players that you talked about, the shipyards, they have order books which span multiple years. So all of these look good. There are other interesting plays, the BELs, the HLs that you mentioned. All of them are interesting. You need to take a specific call on a particular stock if you're interested. But overall, the sector looks very, very strong.
Fair point. Let's look at, in fact, the rallies across the board today. So why point out only the defense PSUs? If you look at the railway PSUs, they are doing phenomenally well. Railtel, 384.95, 5% higher. IRCTC 4% higher, 967. RITES at 691 is 4% higher, and they are accompanied by fairly decent volumes, especially in the case of RITES. About 13,91,000 shares are traded. Ditto RVNL. We started today's conversation with Mr. Dharmesh Kant. He mentioned RVNL has one of his picks, 3.3% higher, 261. Similarly, the entire PSU space is abuzz with gains today. We tracked 78 PSUs for you. Out of 78, you'll be surprised that only 3 are trading in the red, and they are Oil India, HPCL and BPCL. No surprise there, because you've seen a cut in cylinder prices as far as commercial gas is concerned, and that's hurt BPCL, HPCL. They provide LPG as well. Oil India is undergoing a bout of profit booking at about 585, 2.5% lower, 15 rupees down. Strong momentum across the board. Let's get Abhishek into the conversation. You spoke about defense PSUs, Abhishek. Anything in the broader PSU pack apart from defense and railways that catches your interest?
So I've been very, very bullish on Indian Railways, primarily because that's where you see a large part of government focused capex going in. I don't see that changing. That's something which is visible to the general public. I think that is going to continue. So most of the railway stocks should continue to do well. Very, very bullish on them. I think also the mid-sized PSU banks could be an interesting space to look out for. But that is more of a short to medium term kind of a play. Longer term, I would be more inclined towards the larger PSU banks or larger PSU insurance companies. That's probably a more value kind of space to be in. But mid-cap PSU banks is another very interesting area for the short to medium term.
Okay. PSU banks, of course, are also in the thick of action. I saw today in the morning Maharashtra Bank and Central Bank of India doing pretty well. Let's look at the Nifty PSU index and see what is it up to. As far as the index is concerned, as I had mentioned, 18 out of 19 are in the green. The Nifty PSU index is 1.4% higher, 7103. And needless to add, all 12 stocks comprising the index are in the green. Let's look at the top gainer here. Indian Overseas Bank, 6445, 7.5% higher. Very strong volumes, 2.25 crore shares traded here. Punjab Sindh Bank, 6% higher, 6340, about 33 lakh shares traded hands. Central Bank, UCO Bank, Maharashtra Bank, all in the thick of trade, up between 2.5% and 5%. Amongst the leading candidates, Bank of Baroda and Canara Bank are up about a percent each. And let's look at what the big daddy of them all is doing. State Bank of India, 0.6% higher, 757. Coming back to you, Abhishek, there is this theme in the market that large caps are likely to outperform mids and smalls when it comes to financial year 2024-25, which began today. Which side of the equation do you stand? Would you favor broadly small caps and mid caps, or do blue chips find more acceptance at your level?
See, I personally, as an investor, am completely market cap agnostic. And I don't think, when a man or a business person gets up in the morning, goes to office, he thinks about running his business differently if his stock, is a large cap versus a mid cap versus a small cap. He will do his own thing. So, what our job as investors is to find out good businesses which has a long runway of growth and where valuations to an extent are in our favor. That is the bottom line. It does not really matter whether the stock is a large cap or a mid cap or a small cap. Now, having said that, I personally think that this year will probably favor a little bit more of the large caps and larger mid caps than small caps per se, because I think there is some amount of exuberance that is there in especially the SME side and maybe the small cap side. Once that sort of stabilizes, I think then we will see a significant rally there. But ultimately, it will depend on the individual stocks that we are talking about. But in general, I think it will be better to be positioned with large caps and larger mid caps, at least for the next few months.
Okay, with that, Abhishek, thank you so much for your time. As always, we'll remember this wonderful advice on long-term investing from you. And let's hope for you and for all the clients who subscribe to your view at Intelligence Capital, the current financial year that starts today comes out to be phenomenally well compared with what returns you clocked in the previous year. Thank you so much for your time. Okay, Kunal Ramya will be joining us shortly, but between then and now, 22,450 is what the Nifty is trading at, 133 points higher. Let's look at the contributors as far as the Nifty is concerned. As I had said, it's been a very, very strong show in the markets today. HDFC Bank has contributed 24 points to this rally of 130 on the Nifty so far. L&T has contributed 21 points. TCS